Hello and welcome to Business Points live on Global Television, where we x-ray Nigeria's economy, talk about government policies, tech, and innovation. Foreign exchange trading, also known as Forex or FX trading, involves the buying and selling of currencies on the foreign exchange markets with the aim of making profit. The Forex market is the largest and most liquid financial market in the world, with trillions of dollars traded daily. In Nigeria, Forex trading has been gaining popularity in recent years as more individuals and companies seek to take advantage of opportunities in the global currency market. The Nigerian Forex market has its own unique characteristics and challenges, including regulatory restrictions on Forex trading, limited access to foreign exchange due to capital controls, and exchange rate volatility. Now, despite these challenges, the Nigerian Forex market offers opportunities for investors to diversify their portfolios and potentially generate high returns. It is important for participants in the Nigerian Forex market to understand the regulatory environment, market dynamics, and risk management strategies to navigate the market successfully. However, the Central Bank of Nigeria, CBN, has released draft guidelines aimed at strengthening the regulation of Bureau de Change, BDC's operations in the country, including increment in capital requirement. The Apex banks has since come up with several means to correct the volatility and arbitrage, such as reversal of the dollar-for-dollar policy and international oil companies' repatriation of only 50% of proceeds ban on crypto platforms. The most recent is the revised regulatory and supervisory guidelines for Bureau de Change operations in Nigeria, exposure draft, released on Friday. My guest on the program is Jadiel Bassi, who is an asset management expert and the CEO of Premise Techline. He'll be joining me to speak on the FX trading and the peculiarities in the Nigerian market just after this break. Please stay with us. We'll be right back. Many thanks for staying with us. Now, if you've just joined us, this is Business Points on Global TV. And I just introduced my guest, Mr. Jadiel Bassi, who is an asset management expert and the CEO of Premise Techline. Many thanks for joining me on the program, sir.
Thank you so much for having me. I'm happy to be here.
It's an absolute delight.
Thank you.
So now tell me, you've had it all. You're a trader and you're still trading.
Yeah.
And you've had both sides of the coin, per se. Can you tell me some of the misconceptions, the common misconceptions around trading?
Well, when it comes to trading, especially in the Nigerian space, because of the lack of access to the right information, a lot of people tend to think that it is a get-rich-quick scheme. And that is not the way it is, right? Trading has to do with demand and supply, just like every other business, right? And just like every other business, if you don't have demand, there will be no supply, right? So this is the most particular misconceptions that have led a lot of individuals to being scammed by a lot of investment houses portraying to be doing FX. Because, however, if they had had access to this information, they would have known that trading the FX market is not a get-rich-quick scheme. So if you are offering an investment and you are offering a return on investment that is higher, that looks like a get rich quick scheme, right? The individual should know that it's something that is spamish or seems like a scam. So that is the major, above all, that's the major misconceptions we have in this space.
Okay. Before I go into, other areas of trading, I want you to talk to me as a non-trader.
Okay.
What trading entails, like just let me into what it means to trade and, all of that.
Okay, trading, as a beginner, it's simply the transactions that involve buying and selling of different currencies, right? And we have the major currencies being the US dollar, and the euro, the Great Britain pounds, the NZD, that's New Zealand dollar, Kenyan dollars, and the rest, and have you, and also the Nigerian naira when it has to do with the Nigerian space. Now, if you want to go to trading as a newbie, you need to learn, right? You need to put in time to learn the nitty-gritties, learn the ropes, learn the basics before you even think of investing even 1 naira in it. Now, trading is very profitable if you have the right knowledge, right? And you've put in time to practice, right? And then you are under the right mentorship, okay? We have this saying as traders that you need to be in a community of traders so you can leverage on the information available. So as a newbie, I would advise before you go into trading, take your time to learn the ropes first, okay? Before you think of taking a trade or investing in any trading platform.
Okay, so now what are the major currencies that are traded in the,
Oh, as I
Nigerian
said,
market?
Nigerian market, we have the US dollar and paired with the Nigerian naira. You know that the dollar is like the major reserve currency in major economies of the world. And as being Nigeria, our major foreign exchange comes from export of crude oil, and which is based off the US dollar, right? So the major currency in Nigeria is the US dollar paired with the Nigerian naira. We also have, however, the euro, right? And then we have the Great Britain pounds, which are also the major reserve currencies of the world. GBP is very important because we have a lot of businesses that have business ties with the UK, and so forth, giving demand for the Great Britain pounds with exchange for the Nigerian naira. But basically, you have the US dollar paired with Nigerian naira, we have the euro, we have the GBP paired with Nigerian naira, and also the Australian dollar, Canadian dollar, New Zealand dollar, and the rest. And also the Japanese yuan.
Okay.
Course, yeah.
So now talk to me about time frame and trading sessions that are more favorable in Nigeria.
Time frames, there is no particular time frame when it comes to trading,
Okay.
right? Because when you're looking at your chart as a trader, we have what we call the top-down analysis. Now, the top-down analysis is a technical analysis strategy where you analyze your chart from the higher time frame to a lower time frame. Now, when you have to do your analysis from a higher time frame, the higher time frames give you an overall direction of the market, and you can see the history of the chart on a higher time frame more, and then you get the overall direction. Then you come down to the daily, and then you come down to the 4 hour, to the 1 hour, to the 5 minute, as the case may be. Now, as you come down the time frames, you get to identify opportunities, right? And if you see an opportunity on the 1 hour, you take, right? If you see an opportunity on the 15-minute chart, you take your trades. So there is no specific time frame when it comes to trading, but you just have to glance through all the time frames to understand the overall. Because most times, there might be opportunities in another time frame, and then on the, say for a 4-hour time frame, it looks bullish, right? But when you go lower or you go higher, you see that what you're seeing is not actually what it is. Okay, so you get to narrow down your analysis that way.
Okay, so because I don't trade, I want to know for traders, and we have quite a number of people who are traders and who are looking forward to learning a thing or two about trading in Nigeria. I want to know, hopefully I should join the climb of people that are trading, and I want you to tell me about the opportunities that are in trading before we talk about government policies, especially in Nigeria, that are governing trading and all of that. Tell me about the opportunities, like you want me to be a trader, and tell me what trading is and what trading is not.
Okay, when it comes to trading opportunities, we have a lot of, we already know we have unemployment issues in Nigeria, but the number of brokers that are willing to open, we already know Nigeria, we have the market here. So a lot of foreign brokers are coming into the Nigerian space. And a lot of them are really pushing to have a presence in the Nigerian market and also to partner with young entrepreneurs in the trading space on growing their clientele. Now, for someone that is seeking an employment, I've been able to mentor some corpers, youth corpers, that served with a brokerage firm and later ended up working there. And in the space of 2 years, they grew in rank to when they started earning huge salaries in dollars, right? So employment opportunities, right, for people that are looking for a 9-to-5, and also earning opportunities too for people that are looking at a comfortable environment where they can leverage on the internet to make income. For you that wants to be a trader, for example, once you've learned the skill set, right? Because trading involves a huge amount of capital, and you don't have the capital to trade. So what you do, you learn to have it as a skill set. You get satisfied, right? You get certified as a well-trained trader, and you can be employed by financial institutions to trade for them, and then you earn an income or you earn a percentage, or you grow to a point of being an asset manager where you get to work with brokerage firm to manage other people's funds, right? So employment opportunities, earning opportunities everywhere.
Okay. Now let's look at policies, government policies, and how it affects, trading in Nigeria and traders especially. What do you make of this? What do you make of some of the policies that are, around trading?
Well, looking at the regulations when it comes to FX in the Nigerian space, I'll categorize them into two categories. That is the online FX and the offline FX, right? The offline FX is where you have the CBN putting up regulations for the banks and other financial institutions, as well as the SEC, that's the Security and Exchange Commission, giving regulations and putting up laws to be able to regulate this, but on how the banks trade the FX and all the stuff. Now, when it comes to the online FX, which is where we basically measure, the online FX does not have a regulation yet, though there are bodies that are working on trying to regulate the space in Nigeria, but there's no regulation yet, which makes it very risky for traders. But what we normally advise as experienced traders, we advise the newbies to choose a forex broker that has a Nigerian presence, right? A forex broker that is registered in Nigeria, right? Of course, for you to operate in Nigeria, you have to be certified by the CBN and the SEC, right? And by choosing these brokers, the regulatory body has covered the risk to a certain extent. But most of the newbies are being carried away by the offers that comes from these foreign brokers, especially most of them that don't have a Nigerian presence. I can mention a few names that I know that are well regulated. We have Tickmill, is well regulated, and we have Octa FX is well regulated in Nigerian space, and a couple of few, but we have a lot of them that are not regulated. Now, going back to if I may go back to the common misconceptions. Now, why we push so well for people to have this knowledge is because when you engage in trading, and there are a lot of these mouth-watering offers from brokers, we as humans are being pushed by our greed to go for that. For example, a broker will tell you if you fund $100, we give you 50% bonus on deposit. Where are you going to get the 50% bonus on deposit to give to me? That's just to sensitize, as an incentive, right, for you to bring in your money. And being that they are not regulated, we have had experiences of how most of them stop operating in the Nigerian space, and they just go away with your money. You can't withdraw, and you look at your dashboard, your funds is still there, but you can't withdraw, and that gives a wrong image on the industry and making it look like a scam, or making it look spamish. And another thing is why we really want this industry to be regulated is because we have a whole lot of people that are pushing us, that are fronting as traders when they are not actually trading. Yes. And when you look at our mentors up there, like if I may mention Telmelumelu, you see their discipline when it comes to finance, their daily lifestyle, the way they dress, the way they talk, and the places they go to, and how they manage money. Now, but when you go online, you see a lot of people flaunting luxury cars, flaunting dollars, and making it look like to come to FX, you just,
Yeah.
it's not that way, right? And what I normally tell my student, the day I see Tony Elumelu showing us that he has Lamborghinis and Rolls Royce, then I will start doing it. But if he is a mentor to me and he's not doing it, then what makes you think that if I say I'm in the same industry as he is, and I'm doing what he's not doing, that it is right? We look at the whole lot of billionaires in the world that are also
Dollars or thereabouts, and you know, someone was telling me something off camera before the program where he said he knows of someone that had $1,000 and went into trading and it became $600, you know, and he was very optimistic that that $1,000 would become maybe $2,000 or thereabouts, or even three.
It all depends on your perspective when it comes to investment. Now, we all know that every investment has a very fundamental factor which has to do with time. Now, if you look at investment as a child that's being conceived in the womb and then grows in the womb for develops in the womb for 9 months and then being put to bed and being fed, feeding the child and training the child is an investment. But as a parent, you expect to reap from the child when the child is 12 years. You expect the child to start taking care of you when the child is 18 years. You give it time to invest in that child, invest knowledge, invest discipline, right? And also feed that child cultural ethics and allow that child to grow based off your trainings, right? And before you start seeing reward as a parent. Same thing if you look at a plant. A plant does not become a tree and start bearing fruit in one day, even in 1 month, right? So what do you invest in a plant before it becomes ripe enough to bear fruit? Those are also investments. So if you look at all these, you see that the major factor, which is time. For every investment, time is very important. You lose very quickly in trading when you try to squeeze time to make a lot of profit. That's when you lose, okay? But say you look at your earnings in terms of percentage, just as I advised my mentees, even though you have $100 in your trading account, and you can make 1% of your $100 every week, 1% of your $100 every week will give you approximately 4%, 4% in a month. 4% in a month times 12 months will give you more than 40%, which is a good investment. Any investment that pays you more than 40% in a year is a good investment. But you see, based off the misconception, people tell you that you can use $100 to make $1,000 in a very short. It's not possible. Okay? You need to give yourself time. You need to, we have a major principle in trading. We call it risk to reward. Minimum of 1:2. 1% risk for 2% reward. So if you're making 2% reward, it means you're risking 1%. But if anybody promises you more than 2% reward, it means the person is risking more. So either you're risking 50% of your equity to make 100, or you're risking 100% of your equity to make 200. So if you look at the person that lost, go to his or her trading history, you would see that there was more risk with the aim of having high returns in a very short period of time. That way you lose very quickly. But if you were losing 1% every single time you took a loss, it would take you 100 times to lose 100% of your equity. And we all know as traders, your winning rate for you to be a profitable trader should be at least above 50% or 60% upwards. And you cannot say you've lost that amount of money in a short period of time. There are orders that has been put in place to help you stop losses, like the stop loss order is a pending order that helps you stop if you're losing and takes you out of the market. Most traders don't use this, right? So it's based off their own greed that they lose money. It's not based off the market. Because the market has always been there. It will always be there, and people are always going to be profitable from it, right?
Okay, so how do we manage emotions when it comes to losses? You'd
Now,
agree with me that there are some losses that makes you some sort of downcast. So, okay, from experience, because you're a trader and you're still trading and you're an expert in this field, safe to call you.
Yeah.
How do you manage emotions?
How I manage emotion is simply to risk what I want to be downcast if I lose.
Interesting.
So it starts from your risk.
Okay.
If you're risking what you can lose, then you won't feel that way. But once you risk more than what you can lose, that's when the emotions comes in. When you see a little drawdown, right? And then you start shaking. Your $1,000 you're now seeing is left $400. You start shaking. And then at that moment when you're emotional, you make irrational decisions, right? That makes you even lose more. So if you can risk what you can lose, then you won't be emotionally.
This brings me to the issue of fluctuation in trading. What are the factors that influences this volatility?
Well, let's look at it in two categories. We have global economic effects, and then we have the Nigerian, local or Nigerian effects. Global being the interest rate. Okay, if you look at the Nigerian naira being traded with the US dollar, the Nigerian naira would give you, if the interest rate is high, if the CBN raises the interest rate just like they did a few days ago now, and the interest rate in the US is lower, for example, it will now give foreign investors, right, more zeal to want to come in and invest in the Nigerian space. And once they come in, it means more demand for the naira, right? And more demand for the naira means the value of naira is going to increase if the naira is sufficient. But another key factor is inflation when it comes to inflation to affect the volatility of the currency. Another key factor has to do with global news when you're looking at job data, that's especially what we have in the US, which is the NFP. It affects the volatility of currencies. And then you look at the GDP, right? Very important factor too. And then you can even look at government policies too. It's a very important factor too. But when you come to the Nigerian FX space, you look at the price of oil. Crude oil too affects, the Nigerian naira. Another key factor in the Nigerian space has to do with demand and supply for the naira. Now, that's where the CBN interventions comes in, like what you are seeing now happening to the naira against dollar. The CBN has decided to intervene in certain ways by injecting liquidity for the naira, by purchasing naira. And that's because there is demand for naira, the value of naira against the dollar is going to increase. Okay? Yes, so that's basically it.
Absolutely. So just because you mentioned the monetary policy rate, I want us to talk about how it affects FX and away from FX, just still on the Nigerian economy. What are the implications?
Yeah, interest rate has to do more that if you are investing in Nigeria, for example, the percentage or a basis point offered by the CBN helps you make more as a foreign investor. So interest rate now encourages foreign investors to come invest in Nigeria. And if we have more investors, it means we have more businesses, we have more job opportunities, right? And then there is more cash available to the people. So that in turn affects the FX. Now, the value of a currency is based off the economic activities that's happening in that country in real time. Okay? So more investment, more importation, more inflow of cash into the country, more economic activities happening in the country. And also if you look at the price of oil too going up, Nigeria is a major exporter of crude oil. It means we'll be able to sell our oil at a better rate, and then we'll be able to make more profit of the crude oil. So all that affects, basically.
All right, thank you. You've spoken extensively about the FX market, but we'll take a quick break, and when we come back, the conversation continues. Please stay with us. We'll be right back. Many thanks for staying with us. Now, if you've just joined us, this is Business Point on Global Television, and we're speaking about the FX markets and we're speaking about trading, FX trading, and the peculiarities in the Nigerian market. And I've been speaking with Jediel Bassi, who is an asset management expert and also the CEO of Premise Techline. Now, before the break, we were speaking about the implications of the NPR and how it affects FX trading. I want us to look at AI. Now, we hear that, of course, AI has always been a factor here, but now we see that we can have AI trade for us and all of that. What are the ethical concerns? Take it or leave it. People are concerned. Is Nigeria ready? What do you make of all of this?
People that are asking if Nigeria is ready. Nigeria is already on the internet. And looking at AI feeds on information available on the internet, right? It learns, right? If we were looking at it from an angle of machine learning, the AI learns every day. We make information available on the internet. So Nigeria is very ready, whether you like it or yes. We have students in schools already using AI to write their exams. And if the lecturers are not well informed about the AI space, they can't be able to detect answers that come from AI, right? And it's already there. And in businesses too, you can have the AI develop a business plan for you, and based off the information that's available on the net as well, the AI can tell you your common competitors and how you can position your business based off this company had done this and it's working. So it has access to a wealth of information. Now, coming to trading and AI, the AI too, as you know, trading is more of data. Now, when you look at the Forex chart, all you're seeing green and red candles and all that. But that's just a chart, graphical representation of things happening in real life. Okay? If you were to plot a graph or a chart, if you were to make a chart of the data of people that go to work in Abuja and the time they return from work, and in, say, 7 days in a week based off traffic on the road, you would be able to identify a pattern that on Mondays, you're likely to see more traffic on this route and that, and these patterns repeat itself. Likewise, the Forex charts too. We are able, as traders, to identify patterns when we do our analysis. Now, these patterns helps us to predict future outcome based off this happened 1 year ago, happened a few months ago, and we have 2-3 times this has happened. So based off that information, it's likely that this is going to happen again, right? So that's how we are able to make the decisions. Now, what the AI helps us do now is that it makes this decision for you without the emotional factor, like you say. The AI analyzes the chart for you, feeds on the information, is able to identify patterns and take trades for you. But there are limitations, however, because the AI can be biased most times. The market is always being manipulated, and the manipulations also comes from information that is put out there. Like the AI can be misled by the information provided in the net because it feeds on information, okay? And if it is misled, it means it will take your trade in another direction when that's not, because it's feeding on human information provided by the humans. So that is the major limitation for AI. But outside that, it makes the work seamless, it makes it easy. And Tickmill, being one of the major regulated brokers in Nigeria, has an AI on their platform that helps you, that analyzes economic data for you and helps you identify future possibilities that this could likely happen, which is making the work more easier. Before, we had to go through all the platforms, read about, you know, all the stuff, and then being able to confluence what you've read, your researches, and being able to predict what the decisions of the federal government or the CBN might be based off the how it will affect the currency also. So the AI is here to help us do all that. So it's something we welcome, and I would advise most traders that are analog traders to learn on how to give the right prompts to AIs, because the prompt you give to it will determine the result it will give to you. So leveraging on that asset, the AI can make trading really easy for both investors and traders.
So in essence, aside the bias that you mentioned, for AI, there are no downsides, there are no counter effects.
The only downside we see there is with the AI being fed with the wrong information, and then it takes your trade, or it gives you a projection in the wrong direction, okay? But outside that, the AI is pretty welcome, but be rest assured the AI cannot replace the human intelligence, right?
Absolutely.
Yeah, so the AI will always need human beings to be able to function very well.
Okay, so now let's talk about scam. Let's talk about let's try to differentiate between Ponzi and, you know, trading. You know, so can you tell me about, we've had experiences, people say that they've been scammed, you know, and some of these things are the downsides that they hold to trading, especially because of these experiences. What do you make of it? What are your concerns around it? What do you...
Okay, my major concern with people being scammed in the industry is because it's painting a wrong picture about the industry and affecting business for us as individuals, because we have to explain and over-explain and explain, you know, to people why we are different from the rest of probably the investment houses that have had experiences with them. And looking at that, a lot of the investment houses were not even trading, okay? Where they tell you you get 30% or 25% of your investment capital every month. And I do this analysis for people. If you own a business and your business is very profitable, do you make a fixed return in your business every month? The answer is no. It fluctuates based off demand and supply. If there's no demand for certain currencies and there's no supply, we are not going to make money as traders, right? If there's no volatility in the market in a certain month, we might not make money, like during COVID-19. Do you understand? Companies were down, economies were down, economies of different countries were down, transactions were not going on. It affects them. So how are they going to pay you the 30%? So people were not asking questions. Now, what we do as Nigerian is, if I have ₦1 million and invest in an investment house, they're paying me 30%, so 300,000. 300,000 in 3 months, in 10 months, I'll make 3 million naira. That's what's in their head. They were not looking at the risk. Okay? Now, as a trader or as an investor investing in trading, you need to know that there are options for you to have 100% control of your money, where you have to create your own trading account that only you have access to your funds, and you employ a trader to trade for you based off the trader's performance. I know they say that past performance of a trader does not guarantee future outcome, future results. But still, somebody that has a good track record for 1 year, 2 years, 3 years, 4 years, and is consistent can make you a good amount of money, right? So you still have 100% control of your money, and then you just give the trader what we call a trading password. Now that trading password gives the trader access to trade the money in your account, right? And then we have what we call the investor's password, which gives you access to see what the trader is doing with your money, but you can't tamper with the decisions made by the trader. But however, whatever profit you is made realized on your capital, you now share percentage in profit with the trader. That way you have control and nobody can scam you. And then you can, if the trader is making losses, you can say, you know what, stop trading. But you see the investment houses, the reason why they keep doing adverts is they want more people. And if you look at their platforms, you see they will post of how they paid this person yesterday and they're paying more people and how many people are benefiting from it. And then they go ahead to do testimonials by people that have that have received return on investment for like 6 months. We know there is an end, right? Because it is not sustainable. If the banks could pay up to 30%, which is a larger financial institution, they could pay up to 30% return on your savings or any investment you make with the banks, I believe everybody will be very rich by now. Okay? Despite the fact that you can make a lot of money trading the forex market, you can also lose. Remember, it's risk to reward, not reward to risk. Okay? So whatever you're risking will guarantee your reward. And the banks trading the FX too want to risk less. In fact, if you're trading for the bank and then you have to make 3% and you make more than 3%, there's a chance that they will sack you. Because if you're making more than the target they gave to you, it means you're risking more, and risking more of investors' money means it's not good for the bank.
So because we're talking about the Nigerian market now, of course, I'm going to ask you for a platform that, allows you to, that is safe, that is secure. And then I'm going to ask you, because you're CEO of Premise Techline, what Premise Techline is about. But that'll be much later before the end of the program. But I want to know how I can access data, market analysis that are peculiar in the Nigerian market.
Okay, we have different platforms. We have global economic platforms, like the New York Stock Exchange market. There is a couple of platform partnering with the institution to give out real-time data, but you have to subscribe, okay? That gives us access to any information before it's being announced on the CNN or before you hear it on the news platforms, okay? And then coming to Nigeria, we have the Nigerian Stock Exchange, right? Okay. Partnering with a certain platform too, to give. I mean, it's all on the internet. If you research for it, a lot of all those platforms. But as forex traders, online forex traders, we have other free platforms, like most brokers too. Forex brokers offer news update, fundamental updates. I know Tickmill does, and as I told you, they have AI, OctaFX does, and a couple of other ones. But then we have what we call the Forex Factory. Forex Factory 2 gives you access to economic data. And then we have what we call the FinViz. FinViz gives you access to, gives you an analysis of the strength of different major currencies like the US dollar, the Great Britain pounds, the NZD, and the rest. So when you look at your chart on the FinViz, you are able to tell that US dollar is very weak today. So if you're going to be trading US dollar against pounds, you know that the pounds is stronger than US dollar. So you should likely be, positioning your trades, okay, in the direction of the pounds instead of the US dollar. So there are pretty much a lot of them, but under mentorship, you have access to them.
Okay. Yeah. So tell me about Premise Techline. Is this a community? Do you provide insights to tech traders in Nigeria? Or if not, then tell me about a platform that you think, or a community where traders can get insights, can learn about the curve in the market.
Okay, Premise Techline is a tech-based company. Does not really have much to do with trading, except we leveraging on the blockchain technology to automate transactions for businesses and all that. But outside that, we develop help develop apps, and then we build website for businesses. We help businesses have internet presence. That's our major goal. And then help them have seamless operations in their company. Like looking at your company, we can develop a software that automates almost everything you do here and makes it really easy for you.
Okay, so tell me about a community. Do you know about communities where,
Okay, so speaking of trading communities, there are a whole lot of them. And young traders make a lot of mistakes, and which also leads them to being scammed too. Because before you join the trading community, you need to look at the leader of the community. Look at his values, look at his ethics, right? Look at how he operates his business. Does it look like what you want to stay under mentorship, or does it sync with? And most times I call trades for them. Most times I give them hints on trades and let them make the decisions themselves. That way they learn, and I also help them make the right risk decision. Also, depending on the assets we are trading for the week or for the day. So trading communities are really important for anybody that wants to be a trader. Join the one that syncs with your values. I repeat, syncs with your values. So you can be able to learn and not struggle with it and all that. So
many thanks, Mr. Jede Obasi. We
Thank
hope
you.
that you'd grace our platform again.
By the grace of God.
Okay, it's a pleasure. It's an absolute pleasure having you on the program.
Thank you so much.
So we'll take a quick report on the world of business by Kike Lomo Okere. Please stay with us. We'll be right back. Thank you for staying with us. We'll bring you update on business and in the world of business in our bulletin. Meanwhile, we just finished having a conversation with Jede Obasi, an asset management expert on FX trading and the peculiarities in the Nigerian market. This is where we draw the curtain on business points today. Do make it a date with us next time on Monday. And don't forget, we're on Star Times channel 276. Kindly follow us on all social media platforms using @GlobalTVNG and other handles now showing on your screen. I'm Queen Agaba. Thank you for watching and see you again.